You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time yet again for the option block. Everyone's favorite. At least I hope it's your favorite. If there's another bi-weekly option show you like better, let us know. Tell us what it is. I'm not sure if any other bi-weekly option shows even exist. But that said, we do hope you like it. You're listening, so maybe you do. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs. If you guys are just discovering this one, first off, welcome. You're about 500-plus episodes late to the party, but it's okay. We still welcome you, and of course, you can always get everything, not just subscribing to this show, but subscribing to the main network feed. You can find that pretty much wherever you find your favorite podcast, your iTunes, your TuneIns, your Stitchers, your Google Podcasts, all that stuff, including via our mobile app available for all of the major app stores. You can always just stream it also from our website, theoptionsinsider.com, or just search for us. Chances are there's a million other outlets out there that are streaming our stuff. Pretty easy to find at the end of the day. And however you listen, including those of you who can join us live, nice little bonus for our hardcores out there. We do stream it live every Monday and Thursday at 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. So grab our link. We tweet it out there all the time, put it on Facebook, everywhere else. It's on our website. Grab it once, set it and forget it, and you can use it whenever we go live. And of course, always hit us up with your questions, your comments. We do love to hear from you guys at the end of the day. Some of them don't. I like to hear from you guys, so just keep sending them. We do like to hear from you guys. All right, and joining me on the old program today, let's start in order of, well, he'll debate what the proximity is. So let's just start in St. Charles, where we are joined by good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here. Over 600 times now.
Are we on? This is not 600, is it? I've even lost track.
Yeah, I think we're at. I just looked. This is episode 645.
Oh, we're over 645.
645.
You're right. Crazy town. Wow, I'm even lost track of how many there have been. So we didn't do it. We missed our 600th episode spectacular. I do apologize, listeners. We'd like to at least commemorate the even episodes. That voice you heard in the background there, listeners, is also the Greasy Meatball himself. A little less tinny than usual because he's not in studio. He's actually beaming in from his mothership over there in scenic and lovely, at least I hear, when it's not flooding, Riverside, Illinois. Mr. Meatball, welcome back to the program. Shame we don't have you in studio emptying out what's left of our fridge, sir.
I know. Well, we'll make that a regular. Don't worry. But no, today I'm actually hanging out at the pool house. So this is what you miss out in Riverside. Right now I'm poolside, having a financial soiree with you clowns.
Speaking of poolside, I believe we hear a little ringing in the background. I do believe, if everything is working properly and the Skype gods are smiling upon him, I do believe we are being joined for the first time on a solo Skype mission by the Tubster, Mr. Matt Benson, a.k.a. Tubby, who was in studio last week, now joining us remotely. Mr. Tubby, are you there, sir? Are the Skype gods smiling upon you?
I am, sir. The Skype gods are smiling upon us.
Well, there we go. I like it. Well, the gang is all assembled, virtually, of course. Let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's break it down. Time for the trading block. You guys know the drill by now, 645 episodes in. This is the portion of the show where we break down what the heck was going on. That's a pretty fair question to ask. On the street today, the dragons were out there on the old market setting fire to everything. I apologize, I got Game of Thrones on the brain. I've been binge watching to catch up all week, so I've got dragons on the brain of this episode. But it seems like the dragons were setting fire to the old market today as well. Most of the major indices well into the red. The S&P, kind of the middle child of the day, off about 1.5%. The Dow, bit of a laggard to the downside, only off about 1.2%. And the tech-heavy NASDAQ really taking a nice fireball in the face there, off 2% on the day. So not a good day across the board. Of course, all that red means some green on the old VIX screen to the tune of nearly 4 handles on the day, closing about 1568. Let's see intraday how high. Got 1577 was the high, so it did get up 4 handles on the day. Ending up the day, Mr. Meatball, I know you'll love this, 33, almost 34%. Nothing better. In fact, that guy who loves you, Meatball, I'm sure is going to be tweeting us right now saying what percent of a percent did VIX move. Exactly. So let's start there. What percent of a percent did VIX move, and what else caught your eye today, sir?
VIX caught my eye, and the S&P caught my eye. And I think what was different about today, so what you'll notice is that the VIX did not rally as much as it actually did last week when we actually sold off less. And the reason why is the S&P led this VIX rally, not the other way around. This was a sell-off where the VIX popped, not a VIX pop that led to a small sell-off. And that's because, there's this clownish guy on Twitter that keeps throwing grenades. And, Gary Cohn wants to be Fed chair, so he's not leaving. But what the damage being done is just insurmountable, and the market wanted to have a sell-off. It really did. It's been wanting to. VIX has basically been straight up for the last 3 weeks, and, with some dips, but really just up. The market wants to sell off. It wants to retrench. This is a great excuse to do so. Maybe we'll get Donald Trump saying how beautiful this sell-off is, Yeah, if you like Confederate statues, you can probably like sell-offs, but
he'll support sellers and buyers on both sides, so he'll be supporting everybody.
There's definitely some ugliness out there, and I would be less than shocked if we don't get some follow through tomorrow. We got a lower low on the SPX. The VIX did not hit those new highs, but I think it might tomorrow. I think, I'd been talking about the weird VIX. I thought we were going to go lower, but I think what has been said, and now we're all set for the crappy Thursday, horrible Friday, disgusting Monday, then pop.
That's the new pattern, huh? What say you there, Mr. Tubster?
Well, we talked about this on Monday. We saw this last Thursday. We probably were saying the exact same thing last Thursday. Here comes an ugly Friday and an ugly Monday. And we said we got fooled. Because when Uncle Donald wants to tweet something of some sort of good news, like nuclear war's off the table, we tend to rally. But I'm kind of with Mark on this one here, and I could be wrong again. But I think what you're seeing is a distancing of some of the Republicans, the core Republicans, from Donald Trump as well. And we're kind of seeing that some of the things he thought he was going to get done this year aren't going to happen. And this stock market's been buoyed by a tax restructuring, and that's probably off the table here.
I mean, it's certainly in danger.
Yeah.
At
least for this year.
Well, he's poisoned. He has poisoned himself, and it's a real problem. The fact that his boy right now, the only thing going for that administration is Cohn, Mnuchin, Tillerson, and Mattis. That's it. I mean,
you just like saying Mnuchin. That's all. That's why
I do like saying Mnuchin. The guy is brilliant, though. Any guy that can produce the Lego Batman movie and run financial markets is my hero. And Mary, have you seen what's her name? What's Steve Mnuchin's wife named? It's,
I don't know.
She's a pretty awesome. Oh, he produced Wonder Woman. Did you know that, Mark?
Guy's got a few hits on his resume. Man likes Legos and demigod superheroes.
Louise Linton is his wife. The major. I mean, talk about The only bomb associated with Steve Mnuchin currently is Donald Trump.
Yeah.
There you go. Man's got I don't know his wife. I'll have to check her out on the old maybe IMDb if she's there and see what her credits are. That said, speaking of credits, Uncle Mike, what credits or perhaps debits were you seeing out there in this sea of red on the marketplace today, sir?
Credits and debits alike. You got to love doing a credit spread over a debit spread because you actually get paid to do it. Saying that for Sebastian's benefit, of course. Today is a day that I'll talk about this a little bit more in the strategy block later. I'm positioning for more of a fallout tomorrow and then possibly Monday. Maybe I'll make up my mind on that tomorrow. But in looking at that, the other side of this trade is, yes, the VIX did rally today. It didn't have as much of a differential as it did last Thursday when we were having this exact same discussion. But with that being said, 1.5%. After the year that we've been having this year, I still don't see it as a huge amount of significance over the course of the next few months. I mean, you guys know me; I'm the permabull of this bunch. But on here, I do think that the fact that we did not have any follow through to the sell-off last week, we're below the low levels of where we were last week. This is one to where I would definitely recommend making sure that your hedges are in place for, well, I guess you can't, unless you have a futures account, there's really not a lot you can do at this time of day on Thursday after the markets are closed. But I would definitely err to the side of caution at this point in time, just because of the fact that we did have a sell-off last week. And if you just look at a chart of today's marketplace, it's pretty much straight down. So I think that with what we have going on right now, I don't know if this is necessarily the time for a buying opportunity, but it might be over the next few days if we do have the pattern that Mark is predicting of having a bad day on Friday and then just a tremendously awful day on Monday and then a pop. Well, then Tuesday might be a day to start buying then. But yeah, I think that you need to prepare for more of this coming tomorrow, just because of the fact that we just went straight down today.
Yeah, I mean, if Mike, the idea of this is that that major sell-offs that happen on Monday usually have that pattern. Now we see down days on Thursday that don't always end up ugly, right? On Friday, like we did last week, it happens all the time. But typically, the pattern for a major problem on a Monday is a bad Thursday and an uglier or as ugly Friday, like we saw 2 years ago last August. That was the exact scenario. Then over the weekend, we went limit down.
Almost the exact dates.
Yeah, and you combine that with the turmoil that's going on with the administration right now. Even his friends don't like him.
No, nobody. Here's what he needs to do. I think he needs to have a news conference where he doesn't melt down, and put out a bunch of tweets denouncing this. The Confederate thing, I mean, who sits down and goes, you know what I'm going to do? I'm going to compliment Confederate statues. Right. Even if you like them. You don't do that. I mean, it's just, and it's not like he's a Southerner. He's from the freaking Bronx or Brooklyn. Right. He's a New Yorker. It just doesn't make any sense. I think it's quote unquote, we're setting up for a huge sell-off.
Confederate statues aside, stay tuned for our next show, Confederate Cast. I'm sure that'll get a lot of love out there. Just looking at all the love for the new HBO show, I'm sure that'll get a lot of love as well. But moving on to what's a lot of other people have been up in arms about a bunch of stuff. Obviously, not surprising on a day when the market is selling off and other stuff's popping off. We see a lot of people are up in arms, and they were hitting us up about this graph that was put together, I think, by these guys. I think HedgeMind is who they are. A graph of ostensibly George Soros's major options positions. And I'm looking at this. He's got a bunch of random stuff for 0.02, 0.12, VRX, some little nonsense there. But the biggest holding are puts in the Qs. About 18% of his options holding are apparently that. And then follow that by 7.5% of puts in the SPYs and about 6.35% of puts out there in the Russell, IWM. And people are losing their minds over this, saying, oh my God, Soros is crazy short. Look what he's doing. He's fading the market. I look at this and I see a guy who's probably pretty long and probably hedged more aggressively in the Qs. And given today's sell-off, I think, and the magnitude of the sell-off in each of the major indices, it's kind of hard to fault that strategy. Of course, Soros pretty legendary for getting into the tech boom a wee bit too late, about a month before March 2000, when everything pretty much turned on its ear. Some people may be predicting here that he's trying to predict the downturn. I think he's maybe just long and hedging, but who knows? Maybe he is outright naked bearish. Mr. Tubb, perhaps we'll start with you. What are your thoughts here? You think Mr. Soros is just straight short the earth, or he's pretty much just hedging?
But absolutely hedging. That'd be kind of silly to be just straight short like that. I can't imagine. I'm just trying to kind of take in what he's got here, but no, that's absolutely going to be a hedge against other things. He's not only trading stocks as well. He's probably got other utilities in his arsenal there that he's hedging against. So no, not straight short.
No, and I'm wondering why he isn't using index options to save to take advantage of Rule 1256.
No SPX.
Yeah,
that's kind of a surprise there. Why would he use SPY? And
why isn't he? So here's the thing that confuses people, and Matt will confirm this. So if I go into the SPY market, how big will they make the market in SPY? 10,000 up, yeah. Right? If I walk into an SPX crowd, which is 10 times the size, how big will the SPX make the market?
10,000 up.
Yeah. So you can get 10,000 up in SPY or 10,000 up in SPX. So when people say SPY is more liquid than SPX, I laugh.
You different type of trader in the SPX, though.
Yeah.
A lot of your traders in the SPX are funded by either banks or huge funds, whereas people in the SPX or SPY tend to be market maker groups that are out there. So it's a little bit different animal.
Yeah.
Yeah, that kind of caught my eye as well, the prominence of SPY there, not exactly a place you'd expect Soros to be playing for the reasons you just mentioned, the size, not to mention the tax advantages of going out there. But Soros apparently liking himself some SPY and also probably liking the underlying. So, yeah, calm down, everybody. He's 99% probability. He's probably just hedging some longs, which means he's probably just long to the gills this stuff, wants to hedge some of it. So all these people out there saying he's fading everything. And you're right, Tubby, he has been talked up before about how he has other positions, sizable positions, I think in gold and maybe silver and a few other metals. So he does have other, quote-unquote non-correlated assets. But this, I think everyone losing their mind over this chart. I think a lot of people were on StockTwits going crazy about this. I don't think it's really the big deal. I think we'll save our friend here making this ridiculous prediction for VIX. We'll talk about that tomorrow in the vol views. A lot to dissect there. Instead, let's keep on rolling. It's time to dive into some of the weirder paper we saw hitting the street today. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we break down the weird, the wild, the wonderful, the interesting, sometimes head-scratching paper that is lighting up our collective tapes today. Going to kick things off. Actually, let's give a quick update here on our old friends, the Catastrophe puts out there in Tesla. Yeah, they continue to trade. Remember, we talked about 300 some odd on the last show. Today, a little bit quieter out there, only 55. Surprising given the fact the market's selling off. The tech-heavy NASDAQ selling off pretty aggressively. Tesla selling off about 3%. Not much more love for those puts, I should say. I should caution that because it's just those puts that weren't getting the love. Other puts in that realm were getting a lot of love today, which is surprising. We'll get to that in a second. But the total open interest on that strike, 28,266. So a little bit of closing activity out there, which is kind of weird, actually. People have been closing out some of these bad boys. It got up to about 28.5, 28.6. So actually, it's been a lot of back and forth. So all this paper we've seen of late, 200, 300, some odd every day going up on the strike. Clearly, some back and forth on the strike, which is a little bit interesting. But even weirder, you get a little bit higher up on the chain. The Jan 2019 70 puts doing 300, and the comparatively sane Jan 2019 90 puts doing a whopping 1,500. contracts on that strike today on open interest of about 985. So clearly there's some interest and some paper in these bad boys out here. I don't know, Mr. Tubby, before you left the floor there, while my platform's not playing with me, I got to reboot it here a little bit. While we're checking up on that, did you ever fill any paper out there in the old Teslas before you left the floor there?
No. No. I'm not even sure. Yeah, man.
1,500 of the Jan 90 puts.
1,500 Jan 2019 90 puts went up today.
I mean,
put that in your pipe and smoke it.
You know, I've had a nice conversation with a few people. You know, part of the reason for this paper is there is some real now, especially now that they've gone into the junk debt market. I mean, what if they miss their production targets and they need to go back to the market? Which they will, by the way. What's gonna happen to Tesla stock? It's been untouchable and bulletproof. When does that end? When do people say, guess what, Elon? You don't get to lie. You've been lying about production for 3 years. 4 isn't up. I'll tell you when you have bond investors that actually get pissed about this stuff. Up till now, part of the reason for that bulletproofedness is they didn't have any debt. Guess what? They just picked up $1.8 billion in debt. And so if they miss some of these production targets, it's going to be a problem.
You know, it's funny you mentioned that because I had a similar conversation with someone a week or two ago about that exact same thing. Once you start bringing in the debt holders, they don't play around. They jump to the front of the line. They don't mess around with all this excuses, all this nonsense. They want to get paid back. And if they don't, they take your assets. And they're front of line for everybody. So, yeah, it's the second I heard that, I had the same reaction. I was like, oh, these guys, they don't play. So we'll see how that goes with all the fast and loose financing they'd like to utilize over there in Tesla land. You have your thoughts about why so many 90 puts are trading out there, listeners? Hit us up, let us know. Let's move on to the actual paper that was catching our eye today. Let's get out there to, we were talking SPY earlier. Now we'll go to XLU, the Utilities SPDR ETF, closing today $54.18, off about 0.75% or so. So a little bit of a laggard compared to the broad market today. Could be a good thing if you're long a lot of XLU. This is the name that does about 28,000 contracts and change, doing about 88,000 today, 60,000 more than a given day. Of that 88,000, 85,000 come in pretty much all the calls. And of all that 85,000, 81,000 coming in pretty much 1 month, one strike, one mega trade. It was the SEP 57s going up quite a few times, shall we say. They started off with a massive block of 53,290 paper, printing those pretty much right on the offer for not exactly 5 cents, 0.049. Some nice little splits out there. A total of 81,000 going up here. Actually, a total of 82,000 on the day by the end of the day. Later blocks coming in on different prices. All of them pretty much lifting or right around near the offer. OI pretty much negligible on this strike, so pretty much all opening as it appears to be. This looks like on the surface here, it didn't see a lot of underlying going up with it, or it didn't go up printed or tied like it had an underlying component to it. But this looks like someone on the surface, at least, is lining up for a nice little pop here in XLU. Looking back at the year that's been out here in XLU, this thing has dipped as low as about 45 back in November of last year, and now it's kind of flirting with its highs right now. These levels here are pretty much its 52-week highs, and someone out here, if the options paper is to be believed, is feeling a little bit of love here for a good old XLU. Mark, we'll start there. I know you like the whole ecosystem of various spiders. We don't talk XLU a lot, though. What are your thoughts on XLU and about someone clearly thinking this bad boy is going to the moon?
You know what? If you look at why that trade will work, what if the Fed, seeing markets sell off, seeing that the Trump agenda is not going to happen because he likes Confederate statues, sees a economic agenda in disarray, and then says, you know what, we're not going to raise rates in September or October, or comes out, or a Fed speaker says something like that. Where is, XLU is very interest rate sensitive. Interest rates are low. I could see that thing having a serious pop. I mean, it looks a little shot in the dark. Matt, I think you were saying that.
Yeah,
But that's the scenario there. I don't know, Matt. What do you think?
Nickel options are generally just that. As I'm looking at the chart here, yeah, it did dip down to about 45 back in November, but really doesn't seem to move a whole lot. I mean, you probably, even since April, it's had about a $2 range. So he's looking for something clearly that's coming out. As the interest rate thing, I don't think they're going to raise even out to December. That's only at 30% now. But
there was a Fed. Was you saying there might be a cut priced in now?
Is there a cut priced in? I didn't say that. I read that somewhere recently as well. But that seemed like a pretty aggressive move to be looking at $3 higher in this thing. Not sure what he's looking for there, but for a nickel, it's probably a pretty cheap shot at something.
A nickel 82,000 times starts to add up. Even you do anything 82,000 times, and it could leave a mark if it goes against. A handful of nickels, no big deal. 82,000 of them. That'll weigh down. That'll put a hole in your pocket. That much nickel. Interesting stuff. Yeah, we don't see a lot of size nickel prints, let alone that are opening, let alone for this amount of size in a name like this. You're right, a name that isn't exactly known for knocking it out of the park with big aggressive moves. But again, we see a lot of people starting to pontificate about maybe some overly aggressive Fed action coming in the near future. We got our crazy pants friend out there who's saying the VIX is going to head to 60 because of that. For maybe our friend here is on a similar boat and deciding to swing for the fences. He's doing a pretty near term. He says by September. So we shall see. We'll mark this one in the to be watched column, and we'll check back in on our friend here to see how his 82,000 nickels are holding out for him. Meanwhile, let's move on to, I believe this is a newcomer in the old odd block camp. This is Prospect Capital Corp, ticker symbol PSEC. PSEC closing today, $7.45, off about 4.5% or about 35 cents. So not a good day here for good old PSEC. This is the name that does a whopping 841 contracts a day. Today, doing about 25,000 and doing it in a bit of a weird way, which we like here on the old odd block. Started off looking like a standard three-way, maybe looking like a nice little risk reversal financed by some puts or something along those lines, maybe a double short put leg against some calls. But no, that's not exactly what we saw. We actually saw paper coming in and trading the NOV 7 puts right around the bid or right off it about 5,000 times for 21 cents, and then turning around and also apparently looks like maybe they're blasting out the Jan 7-8 strangle, doing that perhaps on a bit of a ratio, doing the Jan 7 puts for 42 cents again on or right near the bid there, and also coming in blasting out 10,000, so a bit of a ratio there of the Jan 8 calls, a total of 5,900 going up on those NOV 7 puts, by the way. So it looks like, at least at first blush here, paper selling the NOV 7 puts, but they're not using it to finance anything because they're just coming in and blasting out the strangle as well. If that is indeed how it went up, that would be funky. I'm trying to think of another time here in the odd block where we've seen strangles before, we've seen puts used to finance things. We haven't seen puts used as extra short kickers on the same strike. So you can see it a couple of ways. Maybe you see it as a bit of a long time spread there on the Nov's Jan 7 strike puts with the 10,000 calls as a bit of a kicker. You can look at this a couple of interesting ways. Either way, it's pretty funky, pretty interesting to parse. Speaking of interesting, looking at the year back here that's been in good old Prospect, this thing has ranged from as low as $7 and change back on November 9th, so shortly after the election, and got as high up as about $9.60, or right about there, back in February this year. So this thing's had a pretty healthy range, a nice two-handle and change range over the past year. So our friend here, if all this premium selling is to be believed, is perhaps not looking for that range to extend much, and is willing to put a lot of contracts where his mouth is. Worth noting, the OI is pretty much negligible on all these strikes, with the exception of the Jan 7 puts. So there are about 14,000 open there. So the rest of the strikes are all pretty negligible, all clearly opening on those. Mr. Meatball, we'll start with you. This is the weird one. What say you of this? Are you in the short strangle with put kicker camp? You think this is the time spread with call kicker? You think maybe they actually got a good execution, that maybe they were actually buying one of these legs? What do you think?
Yeah, this is, I'm not sure what this is. This is an odd little trade. It could be, yeah, so I think it's probably some sort of time spread with calls that, where they're looking to pay as little as possible on it. That's kind of my best bet. But yeah, it's a strange one.
I kind of lean in that way myself, just because it makes some of the most sense. A strangle versus puts doesn't really make a lot of sense. But again, it is the odd block. Mr. Tubster, you put up some weird three-ways and more legs in your day. Anything to add here on this this funky three-way here in PSEC?
I think he's probably buying the Nov Jan 7 put spread and selling the call against it.
Yeah.
I mean, theoretically, yeah, it looks like it may be a little bit out of whack. And I was just trying to go to my favorite friend Henry's site there, but it was locking up on me to see if this all went up at the identical time. But that would be my guess, since he's probably not rolling puts out, because no open interest in no, but buying some Jan puts, selling the no puts against, and selling the Jan 8 calls against.
Yeah, to finance it. I agree with Matt.
Yeah, these all went up in the same block, so they definitely are related on the same timestamp there. So yeah, it is one trade. I think I'll leave it open to our listeners there to intuit. Sometimes when you got multiple legs, listeners, as Tubby can clearly attest to, you get a little bit of wiggle room on how you can execute those legs. So sometimes, even though the print goes up, looking like it went up on the bid or near it, there actually was a buying leg, and that would certainly buying the Jan 7 puts would certainly make a little bit more interest. It could be weird. It could be rolling back to Nov because there's open interest there. That would be even weirder. A lot of weird ways you can look at this one. Either way, though, this is if this is indeed as it looks, this is funky. And even if it's not, it's still pretty funky. Right in with your. I'd be curious to hear your interpretations of this one, because this is one of the ones that could be seen a lot of interesting ways. And I'm going to mark this one down here, too, to keep an eye on this one, see what happens with the OI and whatnot, to see if we can intuit exactly what our friend is up to there in good old PSEC as we move on into our final name / victim here in good old odd block. This is the WisdomTree India Earnings ETF, ticker symbol EPI, closing $25.91, off about 20 cents on the day. It's a name that does about 2,500 contracts a day, so not bad paper for one of these names. Today, doing nearly 34,000 contracts. Of that 34,000, 33,790 coming in the put side, so 734 to 1 puts over calls. And what we saw looks like a friend out here perhaps keeping the party going, keeping a winning party going out here on the put side. We were talking about time spreads and the puts before. That's exactly what we got out here. We got the AUG SEP 26 put spread started going up with about 12,500 of the SEP 26 puts trading earlier in the day for prices near the offer around 40 to 45 cents. Also saw about 7,500, so a little bit of a ratio there. This AUG 26 puts going up for a nickel, a total on the day here of 17,503 of the SEP 26 puts went up, and about 7,500 total of the AUG. I mean, these are 26 puts. The stock's selling off shy of the 26 handle, so clearly these are long puts probably, and they're probably doing all right. He's got a little bit of some house money he's sitting on, which is usually a sign also when you see these rolls. They keep the same strikes. They don't adjust there, but they add a lot more size to that second leg. That's also a good sign that probably they're sitting on a little bit of house money, and they're smiling all the way to the bank, and they want to keep the party going, but doing it for roughly 2.5x more size there. Again, closing out about 7,500. Open interest negligible on the SEPs, and about 7,900 on the AUG. So clearly our friend here rolling a nice 7,500 lot that worked out pretty well for him into 17,500 of the same puts out there in September. We'll see how these bad boys work out for him if they do as well. And this name has been on a pretty much a straight upward trajectory ever since back in December when it was trading around $20. It saw a little brief sell-off here from back in or first week of August, though, when it was trading about 27 down to about where it is now, about 25 and change. Actually dipped as low as about 25.30 or so. So a little bit of a near-term sell-off, but pretty much over the last 6 months, it has pretty much been straight up. So an interesting time for have a put winner, but clearly these guys at least working out. Either that or he's taking advantage of the opportunity of the sell-off to roll out. But if they weren't working, I'm guessing he probably wouldn't be doing more. Mr. Meatball, what say you here on our final victim? You think this is the old house money roll or something else afoot here?
Hey, I guess, when you got something that's working, go with it, right? If you like 7,500, why not 15 grand, right? So, nice trade. Good work, guy. And seems like he's doubling down. So I'm not sure I'd be so bullish on EPI right now. I'll just say that. Smart customers usually continue to be smart.
Well, what I'm actually seeing here is probably a loser on the put. He's just been accumulating stock as this thing continues to roll up. Sells out of the put for a nickel, but he's long enough stock and he's accumulated enough that he needs to double to triple that position and keeps the put in there as the protection for him. I mean, for September and already being pretty much priced at the money, 40 to 45 cents is pretty cheap protection for that name.
There you go, Mr. Tubb. That's why we like having you on, looking at the executions out there. Because you're right, either way, he looks like he has something in his back pocket that's working out well for him. Hence he could finance more of these puts, whether it's the stock, whether it is indeed the puts being a winner. You're right. It did seem like odd timing for these puts to be such a huge winner because there has been a little bit of a sell-off in the last week or so. But other than that, it's been pretty much straight up. So it would make more sense, perhaps, if the stock was working in his favor. Either way, our friend here is laughing at least part of the way to the bank, and he's got some more puts, got some more stock to hedge. Hence, doing roughly 2.5x on the puts out there. Interesting stuff. A lot of names to be watched out here in good old Odd Block. But meanwhile, listeners, you know what time it is. It's Thursday. It means it's time for Uncle Mike to put on his big boy pants. It's time for the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, I hope those big boy pants still fit, sir. What you got in store for us this week?
I don't know. Maybe I've been making one too many trips to Skippy's Euros if they don't fit, but we can work on that. What I want to go through today is just some adjustments that I made today in today's market, and just to kind of follow up on a little bit what I was touching on within the trading block. First thing in the levered SPY diagonal spread strategy, I did a similar strategy that I did last week. Just didn't sell any upside or didn't buy an upside call on it. But if you're interested in what that strategy is, in the interest of saving time on this show, if you have the Options Insider app, go to last week's show, and it's very similar to what I did today. And that would be the best way to get to it. But what I wanted to go through today is a way with which I actually sold some volatility and was bearish at the same time. Now, how on earth can you possibly do that, Mike? Well, allow me to tell you. Folks, we're all volatility traders, whether you want to admit it or not. That's why I think it's important that you're educated on how implied volatility works and you need to have an understanding of it. And I've heard there is this educational company. I host a show with this guy that does education. But anyway, I digress. But I would recommend just making sure that you have a good understanding of how volatility works. Because if you're like me and you're more of a longer-term bull and sprinkle options in on a strategic way, you still have to have an understanding of how vol works. Now, with that being said, here's what I did today. A couple months ago, or I shouldn't say a few months ago, probably about a year ago, we have a long-term position on SPY. And what our goal is with that is to collect upside if the market goes higher, but yet be hedged if the market goes lower. We're trying to have our cake and eat it too, basically. Yes, there's risk involved on it, and there's no way on earth you can ever get rid of risk. But what we try and do is shift risk. Getting rid of risk is not possible, but shifting risk in the option world is very possible, and that's how I try and look at it as a trader/investor. So today, our position in SPY, we actually are long SPY, and we had our short call spread. It has been, it went through it, which is good. So in other words, going into this rally, we were short the 235 call, long the 245 call as a way of financing a long put, which is now pretty much worthless, which is fine. That's what we want it to be. Now, we've missed out on 235 to 245. Which I'm fine with because of the fact that we've been able to capitalize on 200 to 235, and that's considering how hedged we were, I'm pretty happy with that. But today offered a rather unique opportunity, in my opinion. Because of the fact that we have implied volatility very high again, I decided to sell the 245 call. So the position with which we're in right now is we're long stock and we are short the 235 calls on SPY. Now we'll still get if in theory, we're still able to be long the underlying, but we have no upside now because I took away the ability with which to do that. Now, why on earth would I do such a crazy thing, you may ask? Well, it's simple. We had a nice spike in implied volatility today, and the risk reward that goes along with it makes sense. I'll tell you why. What I did today was I sold to close our 245 call. Now it's about break even. I think maybe we lost a few pennies on it because we bought this so long ago. But because of the fact that the market's gone higher, it's been pretty close to staying break even. The risk reward made sense in that, let's say the market were to stay the same between now and September expiration. Well, I'm an obvious genius if that happens because this call would have expired out of the money. Market goes lower. I'm also an obvious genius for selling this call because, we didn't need it. And if the market's going to go down, you don't want to be in a call. So now, with that being said, if I'm such a genius, what's the potential downside of this trade? And why does the potential downside of this trade make sense to where you're actually Mike Tosaw, the perma bull of all time, is actually taking away upside? Here's why. Should the markets go higher? Let's say right now, if we go, my line in the sand for this is 245. If the markets are to go back to 245, I'll get an entry point to this trade again. Or if it goes down to maybe 240 or 230 for that matter, maybe I'll buy it again. Who knows? We'll see. But for the upside line in the sand with which I have, it's about 245. Or it is 245. Now, I'll probably won't get in until maybe 246 or 247. But if we are to rally that amount, here's why the downside of doing what I did today makes sense. You always have to look to see if you're wrong, what is the bad part of it? And this is why I like the bad part of it. Because if we rally, it's very likely that implied volatility will go lower. We had a spike in implied volatility today, but if we were to gain 30 points in the S&P tomorrow, which is what we would need to get to pretty much for me to get to the 246 level in SPY, then I'm not a fortune teller by any means, but I think it's very unlikely that the VIX is going to stay at the 15.5 level that it is right now. Because of that fact, I would be able to buy in probably at a higher price, depending on where I got in, but not that much higher. And here's what I'm benefiting from in the meantime. Every day that goes by, that's theta that's not hurting me. And if it does go back to that level, then I'm able to get back in. Hopefully vol would help me a little bit by coming down, which I believe pretty much anyone in this on this show would agree it likely would go down if we were to rally 30 points in the S&P tomorrow. Then I think by getting back into it, if I'm wrong, it's not going to hurt that badly. So what I wanted everyone to take away from today's strategy block is, have the understanding of what if the market goes up, what if the market goes down, what if the market stays sideways, understand what's going to happen to it. But at one of those areas, you're going to be wrong. And when you are wrong, how is it going to hurt you? And if it is going to hurt you worse than you want it to hurt, then you shouldn't do it. But in this case, should the market come back, should it go higher, it's probably not going to hurt me that badly to get back into this long call. And that is the strategy block for today, show 645.
Good job, son. I think those big boy pants are still fitting, so well done. You haven't been hitting the skippies, gyros, and lemonade too hard. Well, we got a few minutes, so I think we will hit hard. Are some of your questions? It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. You know the drill. Hit us up. Questions, comments, insights, insults to the Rock Lobster, all that fun stuff. We welcome it all. The ladder you can descend to Andrew@optionpit.com. All right, moving on. We thought we'd take a break this week from all the craziness, the fire, and the fury. We just look at, we had the best of intentions. We thought we'd look, past that to interesting little micro things we can all focus on, like earnings. And then, of course, now everyone's fixated on Confederate statues and all the other nonsense that's going on out there right now. But our question of the week still stands. We asked you guys, hey, take a break from the fire and the fury and the VIX craziness. Let's talk earnings. Which options out there this week? Because there still were some big names popping off this week. Which options out there are we looking forward to trading this week? We gave you 4 choices. Uncle Mike, cover your ears. There were Cisco, BABA, Hewlett, Home Depot, and Hewlett Packard would be an interesting one too, but they weren't on our list this week. And Walmart. Let's start with Mr. Poolhouse Noise, Mr. Tubster. Which of these four do you think is winning our poll here with about a day or so left in the week?
I'm going to say BABA still, and that's what I chose on Monday. I'm not happy with it because I decided after our show Monday that I really thought this might go the way earnings have been going and the way Amazon kind of went. And I had a nice little butterfly on about $7.50 lower.
Oops.
And with the market opening lower today, I thought, okay, it might be in shape here. But BABA was one of maybe three stocks that went up today?
Yeah.
To the tune of $7.50 or something. So
up nearly 3% today. So I'm sorry for your fly, but there you go, listeners. We all have ones we wear sometimes at the end of the day. One vote for BABA. We shall see, Mr. Meatball. Is it 2 votes for BABA? Or are you going for, let's say, everyone's favorite, maybe Home Depot or Walmart or Uncle Mike's favorite Cisco?
And Home Depot moved. It tanked and then rallied.
Well, rallied and tanked.
Then rallied
again. Yeah.
Yeah. So that was a good one. I think. When does Walmart report? Tomorrow morning? Or did they just report today?
They reported, I believe, before the bell. Yes, before the bell today.
Yeah,
they're off about 1.5% right now.
That's boring. So I'm sure that people said BABA. I liked Home Depot, and I think Home Depot ended up being the best value for the straddle price.
Uncle Mike, go for it. You're going to say Cisco? You can do it. It's all right. It's behind you now.
Cisco Kid was not a friend of mine. So no, I'm going to go with BABA as well, and I'll say BABA on both ends. Why not?
All the love for BABA. It is the sexy one, and you guys are right. It did pretty much dominate our poll with a day or so left. It's got about 57% of the votes. A tie for 2 with 18% each to Cisco and Home Depot. No love for Walmart, only 7%. So all the retailers out there not getting the love with our audience. They like the high flyers, the rockers and rollers. Not surprising. They like their vol. BABA tends to deliver more of it than, shall we say, a Walmart. All right, here's one. Here's actually a timely one that came up for us recently, Uncle Mike. We kind of delayed it to the show. Hopefully our friend Strangle isn't looking bad. But he's got a question that's right up your alley. At least it used to be, Uncle Mike. We'll see if you still got your Apple game on. He's asking for this. Comes from Amir. He says, hi. Well, hello, Amir. He says, I have an Apple strangle with the 155. So he has the 155, 162 half strangle. It's a weekly until the end of this week. With all the good news, I thought it would pop over the 162 half level, but now it's at, this is when it came in when he wrote it, was at 160.84. Actually, today, the move actually look all right for him. It sold off 1.9% or nearly over 3 handles, actually, trading 157.86. Do you think it will go back up, or am I dead in the water? I think we can answer the last part with, or the second to last part with, it's probably not going back up, at least not right now. But Uncle Mike, are you a fan of this weekly 155, 162 half strangle? And while you do that, I'm going to price it up, see what it's got left on it. But what are your thoughts here on this weekly going out this week?
Real quick, did he say he's long the strangle or short the strangle?
Long.
I didn't hear that part.
He wants it to go up, so I'm guessing he's long.
Got it. Okay. Yeah, no, I'm typically not a fan of strangles, either of naked short strangles, either long or short, unless they're combined with other strategies. Reason being is that you really need a lot of movement for that to happen. If you are going to be buying the strangle, can it go up? Hey, stranger things have happened. You're still a ways away for it going up. Could it continue to tank and go down below the put? That's based on what we saw today. That's probably a little bit more likely. But typically, I'm not a fan of that just for that reason. And if you're going to be selling the short strangle, the problem with that is that, well, most of the time, in theory, you probably will make money. But the one time you don't, you're going to have a bad year one day. And I don't like bad years one day.
Yeah, ask Karen the super trader how selling strangles works out.
I'm looking here. I priced this up while you were talking. It's trading a whopping 24 cents right now. So I'm guessing this bad boy, even with today's movement, is not looking too good for our friend.
No, and you know, one of the things that I think a lot of people need to understand, if you're going to own premium, if you're going to own premium, you want to own it not in the week that it's expiring. There's that beautiful chart of at the money decay, and it gets exponentially more decay-y inside of 30 days. So typically, if I want to do some sort of strangle, I try and finance it by selling that kind of junk. Not one of my Andrew and I favorite trades is like a ratio strangle swap where we'll sell something with sell 5 of something with a week to go and buy 10 of something with a month to go. And that 5 lot produces so much decay that, you end up owning that strangle for next to nothing. So it's really fascinating.
Just to add in there, because Apple's a pricey stock, it's not easy for the retail investor to be along the stock. One of the strategies I like to use is buy like a January call at this point and sell 2 or 3 week out options every, if you keep doing it, scaling all the way through, you're going to get along in the stock if that's what you want, but at least you protect some of that and collect some income away from the stock, kind of like overriding the stock, but the stock's too expensive to do it, so if you do it, it's a deep call, it's a little bit cheaper.
Mm-hmm. Gotta love those. Yeah, none of us really fans of very, very near-term strangles in most of these names, let alone Apple, which needs a bit of room to run. Unfortunately, well, maybe at 24 cents now. I guess, I don't know, you don't say how many you bought, what your price is, any of that kind of stuff, so it's hard to speak to that. But at 24 cents, it's not really a lottery ticket, but it's getting close to that. So you can decide whether you want to take that 24 cents off the board and use it to live to fight a much smaller battle another day, or if you want to just, at this point, maybe the sell-off continues and the 155 put may actually become something. Maybe you take a flyer on that. But yeah, unfortunately, that's the problem. We got to wait for the showtime, and by the time it gets around, stock moves, these things erode like mad because they're weeklies, and so this thing, unfortunately, doesn't look like it's going your way, but hey, who knows? Maybe by this time tomorrow, we could be trading 153 in Apple, and those puts could look fantastic. So we got some short amount of time. We can hit a couple really quick, so maybe some comments that are nice and fast. P. Biggers, he's liking the trade, liking this sell-off today. Says it's a nice vol spike. Good skew in SPX. So he's looking at, he says a broken wing iron condor looks good to grab up lots of premium. Well, there you go. He likes SPX over SPY. Maybe listening to our conversation, or he likes his good old broken wing fly, or as our friend Brian likes to say in his OPR show, a skip strike fly. He likes that strategy. Can't really fault him there. Let's end on this one. This is the nice, easy one and a fun one. This just comes from Unsure 12. I don't know what he's so unsure about, but one thing he is sure about is that he says he loves the podcast. Thanks. Well, you're welcome there, Mr. or Mrs. Unsure 12. We love giving it out to you every week, and have been doing so for 645 episodes, all for free. Enjoy it. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, of course, this is the portion of the show where we tell you what the heck we're watching for the rest of this week into the old weekend. Earlier in the week and last week it was Fire and Fury. Now it's statues, trying to squeeze some earnings in between there whenever we can, but it's a challenge. Let's start with you, Mr. Tubster. What is, look at these people are tweeting their responses to this stuff. Some of it's funny. Whenever you mention Trump on Twitter, the responses you get are interesting. Mr. Tubster, let's start there. What are you watching outside from Crazy Statue Gate and everything else this week?
What I found to be really interesting today was Ackman coming after ADP and telling them how they can triple the price of their stock by explaining to everyone everything they're doing wrong.
Yeah.
Which led to Robert Chapman and others to say, I think the stock's overvalued. So I believe 20,000 of the expiring tomorrow 105 puts traded. I saw this at about 107 on the stock, and I said, I'm going to piggyback this one. So I'm still long those, and the stock closed, I think, at 104.70. So it'll be an interesting open tomorrow on that stock.
Yeah. Wow.
Look at you slinging away there. You're not retired. You're just shifting to become more of an active, high-end retail trader, shall we say, from the Pool House. Pool House Capital. I like it. Got a good name for it already. But you're right. We didn't even get a chance to how crazy it's been. Didn't even get a chance to talk about things like MoviePass, all those other crazy things that are breaking, how it's going to impact the movie, all those stocks selling off, and all the brouhaha over there. Maybe for another day next week. Mr. Meatball, what else is on your radar this week, sir?
Well, we got this little market sell-off that we're in the middle of. I think that could drive things.
I don't know what you're talking about.
Yeah, I know. The one thing that we do see is if you look historically, when we get kind of a shock and then we recover, but we don't VIX really didn't break 12. Then we get a secondary shock, people take a little money off the table. Again, I said this, I think last Thursday. If I wake up tomorrow, I'm still right near the all-time high. I have zero confidence in the president. Why, if I'm not, at RCM where my book is safely hedged, why in the world would I not pick up the phone and call my broker and say, hey, light me up? You absolutely will, and that'll drive algos. And, there's definitely some real risk. That is what I'm watching. Looks like we're done with earnings. Earnings came out really well. I'm going to be watching Alibaba is the other one. I think they had a nice day. I know Matt wants them to be down 10, but I don't think it's going to happen. I think they may get some follow-through. If you call it FANG rotational love, the money going out of Amazon is going into BABA, and that thing's going to take off. But that's kind of everything I'm watching. And then, like I said, keep an eye on interest rates. There's something going down there.
Not the first person to say that this week. I think we'll get more into that tomorrow on Vol Views and perhaps TWIFO. But last but not least, Mr. Uncle Mike, what are you watching for the rest of this week, sir?
Of course, watching all the macro events, but just also it's for our monthly expiration for the triple income strategy. We have a lot of them that are kind of on the borderline tomorrow of whether we'll get them put to us or whether or not we'll get called away in some of the covered calls. So just watching our stocks, watching JP Morgan, Microsoft, United Health, just a few others to name a few, but might have some BBI action going tomorrow, but we'll see where it goes.
I like a little BBI action. It's boring if there's no BBI action, right?
That's right.
True.
It's also boring if there's no music. There it is. All right, that's better. Much better way to end the show with a little bit of music. All right, listeners, you know what that means. It's time to wrap this puppy up. Before we go, one last trip around the old horn. Let's go back in reverse order. Let's start with good old Uncle Mike, who's still busy fitting into those big boy pants. Uncle Mike, what's cooking in the land of all things no ticket charge?
Well, in the land of no ticket charge, it's also the land of let's do something if SPY goes below 245. So if you do have a financial advisor, what I'd like to ask you to ask him is say, what did you do today when SPY went below 245? And if his answer wasn't saying, I'm trying to take advantage of a spike in vol, but yet still have some type of a plan in case markets go higher, then I think that he could probably work a little bit harder for you. With that being said, if you'd like a financial advisor that is looking at the screen all day, trying to do stuff to the best of his ability, give me a call, 312-212-3531.
There you go. I think his answer probably is I sat in stocks and watched them go down. Isn't that an acceptable answer, Uncle Mike? Because that's what 90% of the advisors out there are doing. I just watch it go down until it gets to my trigger point, then I go to cash. That's not an acceptable answer? That's not enough for your hard-earned dollar? Hit up Uncle Mike if you agree. And Mr. Rock Lobster, same question for you. What is cooking in the land of the pit, sir?
Don't call me Rock Lobster. Stop it.
Ah, you're right. I almost got through the whole show without doing that.
I know, you did. I'm watching old replays of my favorite sports talk show, Black and Blue City with Chet Kopic, featuring Matt Benson as the Sox fan. Quote unquote, and I quote, Gordon Beckham, untouchable. For those of you who don't know, Matt was actually featured on a television show about sports in 2010 and 2011 with legendary sports announcer Chet Kopic. If you are a Cub fan or a White Sox fan and you want to have some good laughs about what happened in 2010, Black and Blue City with Chet Kopic and our own Matthew Benson.
That was not the plug I expected you to make, but we'll take it. Black and Blue City. Matt Benson. Check out his sports commentary from 2010. And last but not least, Mr. Tubby, when you're not cracking jokes in 2010, what else you been up to?
Still watching baseball, still watching my White Sox, laughing when they come blow 6-1 leads and somehow sneak away with a win. That's about it. Still enjoying my hiatus for about another 2 to 4 weeks, and
then there'll be some exciting things.
Then hopefully we'll see a new title next to my name besides free agent on my LinkedIn page.
There you have it.
There you go. All right, listeners, check them out over there on the Twitters and whatnot if you want to get some see what he's doing with his broken and wing flies, or not, that was the other guy, but he was just doing regular flies. Or just keep up with his flow and all the other fun stuff over there and his pool house music. Mr. Tubbs, Sox fan Matt, I believe is what it is. If not, he will correct me forthwith. But unfortunately, that's all the time we got. So on behalf of Mr. Sox fan Matt and Mr. not the Rock Lobster, but Mr. Meatball and indeed Uncle Mike and myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing. All the other fun stuff you do, hit us up with questions. Keep them coming. We love to hear from you. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.